What's going on, guys? Welcome back to the channel. This is Shocks and this is ShocksCapital FX. So today we are going to be talking about the concept of market structure, but today we are going a little bit further about market structure. We are going to explain a lot about market structure, what we didn't explain in the last video. So if you are keen on knowing how to navigate market structure in doing your top to down analysis, then this is the video for you. Stay tuned and let's get started. So on market structure is linked to every time frame. So what I mean by that is when you are doing your top down analysis, you need to start on the higher time frame here, and you need to know exactly what to expect on the lower time frame. So what I mean by that is the structure on the H4 is linked on the structure to the structure on the lower time frames. So we will be using the H4 time frame and the H1 time frame to really explain and understand this concept. So you can be using any time frames of your choice, but today we are going to be looking at the H4 and the H1. So from the H4, if the market is moving like this, making a series of higher highs and higher lows like this, making a series of higher highs and higher lows like this, you will be expecting a price to continue going up, because this is a bullish market structure. But what I want you to understand is the structures in between these moves in the H4 time frame. What I mean by that is when we are in this impulse stage, we are looking at price impulsively moving or moving in a relatively straight line on the H4 time frame. So what we want to look at, or what we want to dwell on, is the retracement. We want to look at the retracement, what it looks like on the lower time frame, and how do we enter our trades. So if you are a follower of this channel, you would know that this is an order block. These yellow boxes are my order blocks. So we are saying price has broken this high. That's number one, and price has moved up. Now we want to see price coming back to our order block like that. So the move which comes back to the order block, this one, is what we call the retracement, and this is the move which you want to understand its anatomy on the lower time frame or on the other time frame, so that we can get these time frames in sync. We can really understand how to trade, or how to navigate the H4 and the H1 and all the lower time frames, because the concept is the same, right? So we have seen this being broken, right? And this is the order block responsible for the break of this high. What we need to see is the market coming back to the yellow zone like that and moving away. So from this, you need to understand where to enter your trades from this retracement. So this retracement will look like this on the lower time frame. This is a retracement on H1, yes, but I said this is a relatively straight line. Why? Because there are impulses. So these retracements are the correction move. So the correction move will look like this on the H1 time frame, and the impulse is relatively straight also on the H1 time frame. So what we need to understand here is how do we unpack this correction on the H1 time frame, this one. So this correction on the H1 time frame will determine, or will resemble, a downtrend market structure. It will resemble a market where we are having a series of lower lows and a series of lower highs like this. So as you can see, we are breaking the lows as we move back to the order block. So what you need to see, what we are saying is on the H4 we are bullish. So you need to see a scenario where the H1 also becomes bullish, while the H4 is bullish. So on H4 we are bullish, but we need to see the H1 becoming bullish also, so that we can enter our trades. So the H1 will become bullish when we see the market breaking a high like this and coming back to retest an order block like that. Let's go to charts. So this is odd USD. Let's see if we can find a better chart which represents what we want to see. Okay, so yeah, then let's look at this one. So this is a bullish market structure. As you can see, we are having impulses going to the upside, impulse, then correction, then we have impulse, then correction, impulse, correction, impulse, and we'll see what happens here. So this is what we want to see. We want to see what happens inside this correction on the lower time frame. So this is the H4. So on the H4 we are bullish, yes, we know that, and we are waiting for price to get back to this blue line. Why? Because that's where we have our order block right here. So we want to see how the market gets back to and where this retracement ends. So where this retracement ends is where we are going to be putting our orders on the and the H1, because on the H1 that's where this downtrend on H1 will end. So let's go on H1 and see if we can identify this. So as you can see, this is the retracement on H4, and on H1 we have price moving down like this. The impulses are to the downside. Why? Because we are saying the direction of the impulse is the direction of our order flow. So the order flow on H1 is what is down. So we want to see where this moves exhausts, where this moves ends, this H1 moves ends. So this is the lower time frame view. So what we want to see is when the markets start turning bullish. So we are having these swing highs. This is swing high, and this is a swing high, and this is another swing high. So, and this is another swing high made. So we want to see when the market breaks one of these swing highs. That's where we know we have changed the direction on H1, and we are now in sync with the H4 time frame. So as you can see, this is the touch on on H4. But if you are very aggressive, if you are a very aggressive trader, you will be entering right there. But now we want to identify the turning point of the chart, or where the market really turns and the market is confirmed that it's really a bullish market structure. So this is where the magic happens. There is a break. There is a break of this swing high break. Then after this break, we are having price come back to the return to order block. We are having price retesting the order block right here. So the conservation entry will be this entry. This will be your entry if your risk appetite is not through the roof. So this is your entry, and this will be your stop loss, and you will be looking at maximizing the move which will occur or not on H4, this aggressive move or this impulse from your H1 entry point. So guys, this is how you look at market strategy. This is not a strategy per se, but this is a view on market structure, how you can really identify or understand the two time frames, the high time frame and the lower time frame. It doesn't matter which time frames you choose, but the concept is the same, and all the same you'll be trying to understand market structure in the direction and the best possible ways to enter. So this is how I do my my top to down analysis from high time frame to lower time frame. No matter the time frame, I'll be looking at these concepts. And thank you guys for watching, and this is Shocks. If you are new here, guys, and if you enjoy the type of content we post here, please subscribe and turn on your post notifications so that you don't miss any content we post on this channel. Trade what you see, and this channel is the channel which shows you what to see in the markets. Thank you. Until next time, I hope this was helpful.